We've already seen autos and housing get crushed. Our next guest says retail could be the next consumer space to fall. Chartmaster Carter Worth over at the Plasma to break it down. Hi, Carter.
Well, so there was a lot of stocks holding out as the market has been collapsing, and big names. And last week they all got smoked, from Burlington to Ross Stores to TJX to Target, all down between 7 and 20%. And in principle, it's always the last man standing that finally gets it, and that process is underway. If you think about it, what I wanted to look at is the sector first. At one point, look at this spread. So this is the actual sector, which of course has Home Depot and Amazon in it, versus the equal weight S&P 500 consumer discretionary. At one point, there was 1,400 basis points of spread, meaning the average stock, the median stock, was not performing, but the sector looked so great because Home Depot, Amazon, and others were doing well. Now, of course, the selling has gotten around to those names. So while this is converged, ultimately this is likely to go negative, and I would expect the equal weight to get worse. A few charts, and then we can go on from there. This is a great ETF. It's broad, 90-plus names. It has everything from Walmart to Amazon, Costco, Kroger. It's got all the names like Tiffany and Ralph Lauren. And so XRT is the symbol. Here is the chart. And one thing that sort of is inescapable is that basically you have the double top formation. But here is also the issue. As this was performing, all of this ascent, it really was never making much progress this way. So is it making you money, or in fact, as a proposition, it's opportunity cost that's really hurting you? Now, here's the more interesting thing. Take a look at this relative line. So again, the top is XRT, the bottom is the relative performance, what's on top, you could put anything in there, versus the S&P. And what we know is every single time that the XRT's relative performance line got up to this level, it has failed. And it failed again and again and again. This is literally what algorithms are all about. And to my eye, there's got, well, plenty more to go. It's just not good. Let's look at a few more. This is the sector itself. Again, actual weight. And it's hovering on the line. And I'm going to make the bet, right, that we're going to ultimately break the line. The way to figure that out is to not look at this, but look at the equal weight. Watch what's happened. Again, if we equal weight it, it's already happened, meaning without the influence of a few large cap, super cap performers, we've already broken trend. That's the bet for the sector overall. A stock pick or two, and let's call it quits. Here's Best Buy. I believe it has earnings coming up. It is on the line. It's on the line. It's on the line. It's on the line, and then of course it fails. Not good. It's likely what's coming for other stocks. Totally switch it up, different name, Nike. Same circumstance, same principle. A well-defined uptrend. Not because I say so, your eyes are working, you can see what it's done, and what it's done is broken trend. Not a good setup, and then finally, if that's not a Head & Shoulders top, I don't know what it is. Not good. Something's wrong.
Come on over, Carter. Our eyes were working.
Not because he says so. I love that. I mean, it's in the charts.
It is. It's nothing to do with it.
It's in the charts.
You know, for a while, Carter, people were saying that retail, that there was an unwind of a long Amazon short bricks and mortar trade, and that trade was unraveled, and so that has caused the most recent move lower in retail. So I'm wondering, did the charts play out that way, and what did the charts indicate about that trade going forward? I mean,
right. I mean, look,
is there any hope for Amazon?
So there's trading sort of matters. Can you make a dollar here for an overbought or oversold condition? Can you find something that's breaking or not breaking? And then there's a structural issue. Sure, structurally, we know that Amazon has changed a lot of things, and it's probably going to keep on changing. Right now, it's only half the size of Walmart in terms of the business it does. But I think the important thing is this, that decay doesn't happen all at once. First, in the market or in consumer, you lose autos, or you lose housing, or we lost semis, or you lose banks. But eventually, the selling gets around to everything. As we're seeing now, it's gotten around to Amazon. It's gotten around to Netflix. It's basically finding, and what you guys were talking about this before, your sugar water or fizzy water, money's hiding in a few names, and at some point, they go after those as well.
Can you put your economist cap on quickly? Do you believe this sell-off in retail, does it mean anything about the consumer, or is this just a rotation out of these
I would
names?
say it has to be that, are we going to 1% unemployment? Or 2, meaning it's probably all peak, right? That it's as good as it could get, and that the market is now saying, yes, maybe this is as good as it gets, and that you can't comp these numbers month, year over year, and that the valuations don't support it.
So Carter, you just put up a bunch of names, but you did mention Amazon, and we know how Home Depot acted a couple weeks ago, and how Walmart acted last week. Those are the mega cap ones. They all just acted horrendously. Amazon did have bad news, but does that just not portend well for everything that's
and you're
smaller?
referring just an old-fashioned, act well. One could say, how scientific is that? It doesn't act, but that's a great phrase. It's a technical phrase. It doesn't act well. They know it in sports. He's not playing well. Let's get him out. They don't act well. The tape is heavy. Something's not right.
All right. Carter, thank you.
Thank you.
Carter Braxtonworth of Cornerstone Macro.
Well, I think Carter makes a great point, how just the numbers on the retail side, 1% unemployment, what's already priced in. But speaking of acting well, I just think retail's acted so poorly going into a holiday season where it totally outperformed the S&P from Black Friday, Cyber Monday, gobble, gobble, by the way, Guy. I'm sure if no one's said that to you yet. But the bottom line here is I actually think retail is going to have a great holiday season. I said it 2 weeks ago. I said it 2 months ago.
Do you think it's discounters, though? Will they dominate, or do you think that there's a broader picture than that? I mean, like, for instance, I like Ross stores. I like TJ Maxx, obviously discounters. I love Target. I think because of their diversity, that's a good name as well. And it's pulled down because of Walmart. Since that Walmart numbers, Walmart was over 100. Target's been down. I think that creates opportunity. We'll find out very soon.
Well, it's a good question, and I think the kind of the demographic that's been most helped out by wage gains is absolutely the Target and Walmart shopper. And I think it does bode well for them. But I think some parts of discretionary are going to do very well. And again, these are companies that have actually given you decent guidance in the last numbers. I don't think they've been off.
Amazon did not. Guys, Amazon guided revenues down 5% into their holiday strong quarter. And I'll just make one point. All these companies, Target, Walmart, they're all doing better in e-commerce. Amazon was dominating, getting every other dollar of new growth there. Now we're starting to see it.
That's good for everybody else.
It is. Well, maybe it's just less profitable for everyone else. Everyone has to match
Look at
on all the
Macy's.
free
That's what
shipping and all that
Macy's
sort
did.
of stuff.
I think that's in
down.
the price. That's what we assumed, that their margins were going to zero.
Well, let's see what Target puts up tomorrow
But it's
morning
who
and how
has the
stock
margins and who
reacts.
doesn't. Target has margins.
Guys,
Walmart
these guys
does
are
not.
tripping over each other to get you your stuff that you bought like an hour later. I mean, this is not profitable sales.